I'm your host, Efi Pilarinu, and today I am in Switzerland, where I'm based, and of course it is cold. So the best thing that I thought doing today is reaching out to a warm place, to a warm person, to discuss a very hot topic. So here we are today with Anton Golub, who's in Dubai. Welcome, Anton.
Effie, thank you very much for inviting me, and it's really a pleasure. And hopefully, people feel the warmth that I'm feeling now in Dubai and in this beautiful scenery. And just looking forward and super excited to talk to you and have a amazing hot discussion. Spicy discussion. Yeah.
Spicy discussion, witty discussion, and let's make sure that everybody knows that your background is no virtual background; it is a real background, right?
Exactly. So this is the beautiful back view at the World of Astoria in Dubai. Not that I'm promoting them, but this is just where I am. And hopefully, people can enjoy the scenery as much as I am, even though it is a bit hot here, definitely.
Yeah. We'll have the opportunity, hopefully, to touch on Dubai as a hub of advanced technologies. But for our audience, let me make a brief introduction for you. Anton Golub is, I would say, a serial entrepreneur by now with a financial background. If I'm correct, he was a high-frequency trader, and then he went on to co-found Like, which was one of the early pioneers in the blockchain crypto space, looking to create an exchange that institutions and retail could trade with zero fees, no fees. And then he went on to found Flovtech. And you'll tell us a little bit more about Flovtech during our discussion, but it's really focused on market making and providing liquidity, again, in the crypto or broadly digital asset space. And in general, I would say Anton is very much into the blockchain for finance space, and not only as an entrepreneur, but also as a researcher, an academic. Anton, if I'm not wrong, you have published a couple of academic papers on the topic, right?
Yes, exactly. So thank you very much for the kind introduction. And indeed, I have been very fortunate to be on both sides of the market structure. One as a running operator of an exchange, but then also seeing how exchanges and this tokens and the whole ecosystem functions from market making perspective, and I was always very keen, and besides on the business side, which is extremely important, but they kind of view our ecosystem, fast growing, evolving ecosystem from an academic side or from a research side. And there, I was fortunate to work with good people and publish some interesting research, if I can say it like that. Yeah.
Yeah. Before we deep dive on very recent developments from the regulatory and the business front in the crypto space, I wanted to ask you to tell us a little bit about market making in the crypto/digital asset space and how it differs from the traditional space. I mean, I come from the traditional space, and I understand how that is done, the matching of order books, who are the players, and so on. Could you tell us briefly about market making?
Yeah. So it's very interesting also how you introduced me, in a sense that you said first I ran an exchange, which is an amazing experience, and but there's something magical that happens the first day when you launch your own exchange. You kind of learn really the hard way that without liquidity, exchanges do not work. I mean, you can have the fastest technology or the best technology or the best matching engine, list the best assets, or the ones that you think are the best assets. But then if you don't have liquidity, kind of the whole concept falls apart, And this is actually my experience, how I got to introduce to market making, namely kind of if you reflect on it, on our ecosystem, fast-growing ecosystem, where over time, you will have millions and millions of tokens. Each of these tokens will need a market maker. Namely, we'll need liquidity, and a company who solves that problem is a market maker. Yeah? And my experience on the traditional side, when it comes to market making, comes predominantly on the FX side, so foreign exchange trading, which is very specific in a sense that it's an interbank market dominated by the, the big, as it kind of says, the biggest banks in the world, and you trade against them. So it's kind of like a multilateral, bilateral market predominantly. And then you have a couple of trading venues, kind of slash exchanges, if you want to call it like that, like EBS, but they're kind of microscopic or very, very small compared to the overall market, which is 4 trillion per day, which is dominated by the banks. So this is my experience. And also have experience a bit on the equity side, but predominantly on the FX side. Now, when you kind of move now towards the crypto industry, it's very interesting kind of what you see there from a market structure. You have basically out there more than 300 exchanges, relevant exchanges, if you want to kind of call it like that, both on the centralized exchange side, where you kind of have a replica of what you would see in the traditional space, or kind of, it's very different because centralized exchanges are at the same time a matching engine, a clearing entity, a settlement entity, and a broker as well in many cases, and they provide a margin as well. So this is going to have these beasts. On one side, you have the decentralized exchanges, which are completely different in the way how they operate. I'm sure maybe some of your viewers know about Uniswap, BankXY, SushiSwap, the automated market making protocols who can be version 2, where you have an inbuilt pricing mechanism, or automated market makers of version 3, where you have a mechanism to provide liquidity across specific price ranges. So it's more closely to centralized order books. But this is a massive and very interesting ecosystem. Yeah. And kind of what I have to say is that one thing that you learn very quickly in the crypto space is that the exchanges and the market makers are way too close together. So if you come from the traditional space, you know how much efforts, how much experience the regulators have had over the decades and even hundreds of years, and what they have seen, what happens when you have a market maker and exchange too close together, right? Almost kind of being in the same bed, if I can say it like that.
Yeah.
And this is what you learn very quickly, what happens in this crypto space, that, market makers and exchanges have a very close relationship, which many times doesn't materialize in the right way. And I'm sure now we'll later on reflect on that, on the collapse of FTX, which is a cryptocurrency exchange, and Alameda Research, which is a market maker, which were basically the same companies in a nutshell. So this is kind of what you see out there. And I think we're kind of suffering the consequences of that. And which might result in a very different market structure, in the near future. Yeah. So this is kind of how I would give it as a short intro. But obviously, market making, is fascinating, especially because you don't have fixed rules like you have in the traditional markets. Yeah, and that kind of gives a lot of opportunity to innovate, but also a lot of opportunities to not go in the right direction, if I can say it like that.
Yeah, I mean, there's governance issues and regulatory issues that, we could borrow from the traditional world into the crypto world, but of course the innovators don't want to borrow those rules, and then we have, what we have seen. But I want to first discuss with you the recent announcements by the EU that were celebrated initially by the crypto community in terms of the EU saying that they will allow banks to hold up to 2%, although I think they're advising around 1% of their capital in cryptocurrencies. But what most people haven't read is really the footprint or the footnote of all this, which is about the risk weighting. So let's talk about that. Well, because I know that you have a strong opinion on this topic.
Yeah. So yeah, I think it's fascinating what happened recently. In terms of how the regulator is steering the banks in a certain direction. And basically, just to say, like, when you think about banks, even though they can be crypto banks, like the first thing you will think of is like, okay, they are going to do bank-like activities, right? And what banks do on a massive scale is they, borrow from one,
lend, right?
Yeah, exactly. It's very straightforward, and that's why you get a banking license, by the way, right? You don't get a banking license for fun, because it's very capital intensive, operational intensive. There's just really a lot of money has to be thrown in there to launch a bank. And then you kind of say, okay, let's do bank-like activities, and borrowing and lending. And then you kind of, what we have seen now with European Union regulator, But this is not the first time we have seen it. We have seen it also with the Swiss regulator, who was the pioneer in approving crypto banks, so giving them licenses. In a sense, what they did is what the European regulator did, but also the Swiss regulator did. What they basically made it infeasible to have crypto assets on your balance sheet, because when you're a bank and you put crypto assets on your balance sheet, you need to have capital to offset any potential losses per se on those assets that you have in your balance sheet. And then you would kind of think like, okay, but if the capital required for those assets is very small, you know, maybe like a couple of percents or 10% or 20%, then it kind of, you can see a business model. But if your capital requirement is 10 times the assets that you have in your balance sheet, then you realize actually the regulator doesn't want you to have crypto assets on your balance sheet as a crypto bank. So this is what you kind of very cleverly said, is that basically the risk weighting is 1,200% or a bit higher, meaning you have to have 10 times more capital for any asset that you put on your balance sheet. This is completely unfeasible. You cannot run a bank like, cannot be a crypto bank and do bank-like activities with this kind of requirements. And
Anton,
then you can wonder, okay.
When I read that number, I went to research because I didn't know the number off the top of my head. What are banks required if they're holding junk bonds, for example? So these are, you know, corporate bonds that are the worst credit. And still, it's just 1-to-1. It's just 100%. If they're holding mortgages, I mean, these are rough numbers, it's 50%. And here we're talking 1,250%, right? It's just like, you know, it's shall we call it a diplomatic ban of you know, being in this business? That's what it is, right?
Yes. Yeah, absolutely. It is basically what it is. And because it just makes it completely capital and efficient operationally, you can be profitable basically doing that. And it's very interesting how you compared it to traditional space where, you know, even for what you would consider also very risky assets, you know, the weighting, you know, that translates then into capital requirement is a lot lower for, you know, what we at least we could perceive quite risky assets as well. And I think, you know, then basically you can reflect, okay, but if that's the case, then what can those crypto banks, and I put them under quotation mark, what is it that they can do? The only thing that they can do is actually provide off-balance sheet custody. That's the only thing that they can do actually as a bank, you know? And that's actually in the direction that the regulator is pushing them in. And now if you kind of, if you remember that, but if you kind of roll back a couple of years, you will realize that Swiss regulator did the same. So when they were kind of giving guidance, they put a risk weighting of 800%, which is not like 1,200, but still astronomical. Sorry, go ahead.
But Anton, that 800%, because I want to give them a bit of credit to FINMA. When they did it, and it was when was it? If are we right? If it's 2016 or 17?
The guidance was given in late summer 2018. Kind of they came up with this number actually.
Okay. And then we had two licenses to SEBA and to Signum, right? But wasn't there thinking that the volatility overall, and let's say in Bitcoin, was in that order? And if that's the case, if we look today, I mean, today the volatility is very low because probably there's lack of liquidity, but even before that, the volatility was dampening. So I'm not sure, but I mean, you said it clearly for banks, it's an off-balance sheet custody offering, maybe an advisory offering but, you know, can a business survive on that is so capital intensive? I don't know. What I do realize is that if we have a diplomatic banning of, you know, the lending and the borrowing from regulated banks, then what the regulators are really saying is they're blessing the shadow banking system to grow. They're putting their blessings and saying to everybody that's out there, that's a non-bank player in the crypto space, go ahead, and get into this business of lending and borrowing. Isn't that the case?
That's absolutely the case. And you have this experience having been on Wall Street for a long time, is that when you have an activity that the regulator doesn't really allow you to do, that it just actually kind of goes offshore, it doesn't disappear. Because
you find off balance sheet ways to do, what needs to be done. And in the traditional space, we have lots of experiences with that, with all the unlisted derivatives, all the structured products. I mean, we can go back to the 2008 crisis. I mean, what was that all about? It was all about these mortgage-backed securities. And even though mortgages are fine and they're on balance sheets of banks and they're okay, all the rest of the repackaging was off balance sheet, credit default swaps and all that. So this is as if we're not learning a lesson.
I would agree with you. I also think like this is maybe not the right way to go. And the reason why this is interesting, I mean, because what you referred to, I mean, the crypto shadow banking ecosystem is massive in the back, because there's a huge need for borrowing and lending on an institutional scale, yeah. And I think this is, I think definitely in the case of the EU regulator, maybe they're catching up, but too late, right? And what my worry is now is, okay, if they're kind of not addressing it, which we have obvious fallout, I mean, clear fallouts from the crypto shadow banking ecosystem now, and they're not addressing this issue. What I'm worried, is that, if they don't address it fully, it will again go offshore, and in the back, you will again have an issue or a blow up in a few years, or that actually what is now an opportunity, if you can kind of think of it like that, is for the US regulator to really kind of go in hard and heavy and flat out ban this, or regulate it really a lot, but it becomes very difficult to grow because you won't be able to innovate, going forward. So this is kind of like, it's a very dynamic picture, or the very dynamic state that we're seeing now. But, the fact is that it's the big fallout that's happening now is very much driven by the crypto shadow banking ecosystem, basically by companies who behaved like banks, but they were not banks, yeah. And if we don't address it now or rethink how we go forward, I mean, the history will repeat itself, as we have seen maybe on Wall Street many times before.
Yeah, Anton, I mean, up until now, this lending and borrowing was happening in the best case through the centralized exchanges, right? Through the usual ways where they provide leverage, right? And
Yes.
I'm not familiar with the margin call practices that these exchanges had. Were they conservative or non-conservative? Were they protecting themselves? Can you give us a bit of a sense of that? And then maybe what the asset managers like, the players in the market, Genesis or Voyager, what were they doing? How were their practices?
Yeah. So to portray first like how this whole ecosystem works is that on one side you had the very much what I would call debt hungry players, which were the market makers, proprietary trading firms, hedge funds, and so on. So these are the players who really wanted to take on as much debt as possible, yeah, and mostly on an uncollateralized basis, yeah. So this is kind of one group, and the other group is you had institutional players, many times retail actually, who was providing that capital to many different players. For instance, through retail borrowing and lending platforms like Celsius, BlockFi, Gemini as well, for instance, or through institutional players like Genesis. And so they were sourcing that liquidity through many different sources, and this was then going towards those debt-hungry players who needed liquidity, who needed capital to operate their business. So this is kind of how the ecosystem very much worked, And Genesis, that you mentioned, was by far the biggest player in the crypto shadow banking ecosystem because of its track record. I mean, they have been around for many, many, many years. They were backed by a very strong player, a digital currency group. So they were a daughter company or subsidiary, or one of the entities that the digital currency group owned. And they were this big player that was kind of in the middle of that craziness. Yeah. And obviously, I mean, now we know that, after the Terra Luna collapse, and then after the 3 Arrow Capital collapse and the FTX collapse and Alameda collapse, that basically kind of Genesis is now stuck in that limbo, in that mess. And it's highly likely that there will be losses there that will happen. And a lot of players are unable or immobilized to move forward because of Genesis, kind of what that was blowing up. But the Genesis, you can think about it kind of in a summary, is this player that was sourcing capital from many different places and then borrowing or lending out to uncollateralized basis to debt-hungry players. So this is kind of how we can think of Genesis. Now, exchanges operated very much differently. Is that exchanges understood market making and liquidity very well, and they were enabling liquidity provisioning on a massive scale, in a sense that if you ask me how it worked, very common was actually to get a credit line from an exchange, meaning literally you can trade for free, basically, and you would not, as a trader, you would not have any exposure to an exchange because they would give you a credit line and then you trade with that credit line. So they have an exposure to you, but you're not to them, And these credit lines were, massive. I can point to a specific data point data that's now publicly available, namely FTX, the cryptocurrency exchange, gave to 40-something traders credit lines up to 150 million. So basically, that means you can have a negative balance of up to 150 million before FTX would react, And that just gives you a little bit of a feeling how massive it was. If you can, it just sense how big of massive these positions were. In a sense, just to explain, the credit line means that the market maker owes the exchange up to 150 million. And there were 40 players that had kind of credit lines up to that level.
Anton,
so this was kind of like...
sorry to interrupt you now that you said, you mentioned this sort of anecdotal evidence of 40 traders and the 150 million lines, right? Last week I was out with some crypto people, and there was another anecdote that they shared, which was fascinating. How many crypto traders there are globally versus developers on the blockchain. And they said, and I don't know if this number is valid, that there's like 10 times more traders than developers. So if there's, let's say, 30,000 developers on blockchain globally, there's 300,000 traders. I don't know if that's a correct scale of things, but if exchanges enabled this, it's just awful.
Yeah. Yes. I mean, you hit the nail on this one. Basically, the biggest value add, if you can think of it like that the exchanges offer is actually speculation, right? Because that's basically what these traders in many cases were doing. Okay, you have the market makers who provide liquidity, but you have also the prop traders could take prop positions, or trade thinking the price will go up or down. But I think that's I would definitely say that this is somehow how I would feel about it. And also it just shows that we have a long way to go to build valuable services to the whole community and the whole world, and not just to speculators. Yeah.
But ironically, if you think of it, in the traditional markets, we had to wait for the 2008 financial crisis to close down most prop shops, right? Yes. On Wall Street, and at least on Wall Street, proprietary trading is done. Of course, there's the shadow trading, through hedge funds and so on, but that's the reality of it. I mean, in terms of crypto banks that we mentioned before, yep. And I don't know if there's other ones except the Swiss ones that are really licensed globally. In the US, we don't have any, right? However, we do have banks like Silvergate that are involved in the crypto space, providing different services. How are they facilitating this type of shadow banking, in your knowledge? By yeah. And in what ways?
Yeah. So there are, as you mentioned, there are the well-known Swiss crypto banks, and a few other players around the globe. Indeed, there are in US, a couple of banks. I mean, they're not natively crypto banks, but they are banks who operate in the crypto space. And you mentioned Silvergate, another now better known now is Signature, where they were basically traditional banks doing very much different lines of businesses, but kind of pivoted towards the crypto space. And unlike the Swiss crypto banks that I would like to call as licensed off-balance sheet custodians, the US crypto banks, namely the top players, Silvergate and Signature, were super well known for their actually layer one solution, if I can call it, where they could actually, where through their infrastructure, if you deposit, let's say $100, they would actually then issue stablecoin in that amount of $100, which then you can use to trade with other players on their internal network, an internal ledger, and then settle instantaneously. So this is, for instance, Signature had a very, well-known, like Silvergate as well, similar infrastructure that they call Signet. So everybody who was onboarded on Signature and who used this mechanism. So if you and I were both onboarded on Signature, if you ID the trade, basically in real time, that trade was settled. So if it was a stablecoin trade, it would be immediately settled. The reason why this was a big innovation is because if you try to settle, you and I try to settle transactions using traditional banking infrastructure, which operates in cycles, daily cycles, then this would take forever, So this was their big innovation, and this is how they were, let's say, supporting this crypto shadow banking ecosystem. But, what I want to point out is that they were not actively leveraging their balance sheet to borrow and lend. This was not the case, yeah. So they did actually kind of on-chain, they did custodize or take your deposits on their balance sheet, unlike the Swiss crypto banks, but they were not then taking those deposits and borrowing and lending in the crypto shadow banking ecosystem. That's not the case. What they did is that they took those deposits, but they invested into treasuries. And when Silvergate had a bank run a few months ago, then they had to liquidate those positions in the treasuries to pay out the deposits, yeah. And I think you kind of maybe in your viewers know that treasuries moved quite a bit over the last couple of months, and then Silvergate experienced massive losses, like literally massive losses that wiped out their profits over the last decade. So this is just want to explain that they were facilitating or enabling the crypto shadow banking ecosystem as a bridge between fiat and crypto, but they were not actively borrowing and lending as Genesis did, for instance.
Yeah, so it's more they were offering infrastructure, enabling settlement as a service,
Yes.
and earning, I imagine, some fees there, or licensing fees for the infrastructure, and it's just amazing how the domino effect is there, no matter what type of business you're in. Everybody has been affected. Everything has been affected in this crisis, let's see when we will recover from all, when this Facebook will recover from all this. Anton, before we close, what are you, we talked about all these issues, and hopefully we helped our audience understand what's going on behind the scenes. We're not here to talk about what we think the price of Bitcoin or Ether or whatever is going to happen. What are you excited about in the space, and also maybe a few words about the Dubai blockchain and advanced technology ecosystem, since you're there right now?
Yes. Yeah. So first, just to say, and Effie, you know me very well, that I'm very optimistic about our industry. So let me repeat that. I think long term our industry has an enormous potential, and retail will be the foundation and the backbone. The infrastructure that we're building will be the foundation and the backbone for the growth that will happen in the next decades. Having said that, I talked to quite a few people over the last month, I'm sure like you did as well. And everybody tells me it's very difficult at the moment. I mean, the contagion is still happening. It's still ongoing. There's a lot of challenges. And, in those challenges, there are many interesting opportunities. I personally think that this issues that we're experiencing and have experienced with the crypto shadow banking ecosystem provides an enormous opportunity for a transparent, reputable, and sophisticated borrowing and lending infrastructure, where we can match qualified borrowers and sellers, where we can mitigate and manage risks, and that capital can then be deployed in right purposes. Namely, I think that a good purpose is liquidity, and not so much good purpose is speculation. So I think this is an enormous opportunity, and I know that you and I have some common friends who are operating in this space. For instance, in Switzerland you have Celeste, FQX, who are building these borrowing and lending platforms that can bring transparency to the crypto shadow banking ecosystem. But likewise, also many other platforms around the world, like more on the DeFi side, that's Maple Finance, True Finance as well as another protocol that kind of are enabling and bringing clarity into the crypto shadow ecosystem. So this is something I'm very excited about. I think there's an enormous opportunity. And kind of one other topic on a very on a different tangent, I'm very keen and excited what the centralized social networks will build and bring over the next year or so. As you might know, the founder of Aave, Stani, has launched Lens protocol, which is meant to serve as an infrastructure to build applications with a theme, with a focus on social networks. And I think kind of how, when we now seeing how Twitter was managed in the back and how much power was used and abused in the back by a centralized player, the biggest one on the social network side, I think there's a lot of inspirations how we can build social networks on the blockchain that can try to solve the problems. Yeah. So this is kind of what I'm excited about. Now, when you talk to me, when you ask me about Dubai, I would say that the quality of people over the last years and year has improved really dramatically in Dubai, and some of the world's top people are currently in Dubai. And there are many reasons why that happened. I think Dubai is growing a lot. There's a lot of opportunities happening here on a bigger scale, and kind of the blockchain and crypto industry is leveraging that. There's a clear motivation on a governmental level that this is the way forward for Dubai. And finally, Dubai has also taken a lead on the regulatory side, obviously, which is very challenging, but they kind of set up local regulators that will deal with crypto companies. And there's a long way ahead, but there's a kind of like a path forward, how they want to proceed with that. So this is kind of why I see this Dubai extremely interesting. But in the end, as you know, Effie, I'm sure you agree with that. In the end, it's all about the people. There are some amazing people who have been working here in Dubai on the ground to build the infrastructure and the ecosystem for many years. For instance, our friends in Crypto Oasis, Ralph Glabeshnik and Sakar, who have been doing amazing work, and they're the ones responsible that all of these amazing people are now coming to Dubai. So this is how I portray the situation at the moment in Dubai.
Excellent, excellent. Anton, thank you so much for all these insights, and I'm sure you'll be back with us later this year because there's so much activity happening. We'll be able to talk about totally different things and hopefully a brighter picture and leaving behind the contagion that happened last year.
Thank you, Effie, for the positive words, optimistic words, and thank you very much for inviting me. And it was really a pleasure, and looking forward to talking to you later this year and seeing all the amazing things that we as an ecosystem have done. Thank you very much.